What if you want to close your company and you got a bounce back loan? That's what I want to look at in this video. And I think it really depends on your motivation, why you want to close your company. Is it because it's just stopped trading? Because you just can't afford to pay back the bounce back loan? Or maybe it's you just want to get out of paying the bounce back loan. Well, I want to look into all of that in this video. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel, and if you press the like button, it helps me and the channel. So bounce back loans, a lot of people took out bounce back loans during the pandemic, but they last for 6 years. I know the payment period is 5 years, but you have a sort of a year of grace, and then you have 5 years to pay them back, or maybe even longer if you extend the loans. Well, a lot can happen in 6 years. A lot of people's businesses change completely, particularly over the last 2 years, because a lot of people have reappraised their lives, or their businesses have reappraised their life in their business, and so things have just changed. And so I'm getting asked now, what do you do if you want to close your company and you have a bounce back loan? Well, there are different options and possibilities. I think first of all we just need to look and just make sure that you've got the right bounce back loan. So if you remember, you could only get a bounce back loan for a quarter of your turnover. So if your turnover was £30,000 and your bounce back loan is £50,000, you do need advice, because you've actually claimed the wrong amount of bounce back loan. And if that is the case, you do need to put it right as soon as you can, because you've done something that's not right. So I would ask you to seek advice in those circumstances. But if you want to, so it is possible, and I get sort of asked a lot, well, can I just make the company go bust? And people sort of do that either because they just don't want to pay back the bounce back loan, or they think they can, the company's finished, and they therefore have this liability, and so why should they pay it back? Well, it's not just as simple as that. First of all, there are repercussions from letting your company go bust, because it does affect your credit rating as a director, because you have allowed your company to go bust. I always think it's slightly weird with bounce back loans, because they were sort of encouraging you to take out loans even if you were insolvent, which normally you wouldn't do as a director. So I think there's a slight peculiarity in the normal law, but it definitely has repercussions, and the insolvency process you may not enjoy. And I would definitely ask you to seek advice from an insolvency practitioner. But there is more to it than that. So if you allow your company to go bust, well, or if you just stop it trading and stop it from making the repayments, then we just got to think that through a minute, and I think that is the key. So what happened to the company in the first place? So the company borrowed the bounce back money. So let's say it's £50,000, the maximum amount. So it borrowed the £50,000. But then what did it do with that £50,000? Now, it might have just subsidised its poor trading, in which case the other side of it is just the losses on the trading, and therefore the company is genuinely insolvent, and therefore it is maybe possible to go down the insolvency route, and I would ask you to seek advice. But that's actually not what happens in most cases. In most cases, what happened was the bounce back loan was taken out, and then because the directors didn't get the full furlough during the pandemic, what they did was they used the bounce back loan to take the money out to subsidise their personal income while their income was damaged by all the lockdowns. The way that is expressed is that you will have an overdrawn, you're likely to have, depends on the circumstances, you're likely to have an overdrawn director's loan account. So you owe the company money, the company owes the bank money. Now, if you unravel that by the company going insolvent, then the insolvency practitioners will look at the creditor, so they're looking at the bank's position, and then they'll try and recover the debtor. Well, the debtor is with you personally, so in effect, you end up personally owing the money via the company to the bank. And I think that is a situation is very common. I think it's one that you need to be really careful of, because if you let the company go bust, not only do you get the sort of negative to your credit rating of being a director and letting it go bust, you've also taken money out to subsidise your income when it was intended to subsidise the company. So you probably somewhere in there you breached the rules, and you have to pay the money back anyway because you're a debtor of the company. So in those circumstances, so what do you do? Well, seek advice by all means. I think the other thing is that you need to really repay this money, and you can either do it so you can, if you want to close down the company because you don't need it anymore, you can either just keep the company going and make the payments effectively personally, so you're putting the money into the company and then the company's making the payments. You can do that. You can maybe extend the payments to make the loan a 10-year loan, so speak to the bank and do that. Or you could, if you really want to close the company, because there are costs of keeping the company alive and you might not want to incur those costs, particularly if you've got a smaller bounce back loan, then you might want to take out a personal loan, repay the money into the company, and then you can repay the bank, and then you can close down the company. And I know that it's sort of a thing down the put, people, I think there is a reasonable amount of people who are letting their companies go bust, and I think there will be repercussions, because the banks, it's the guarantee with the government is only if the banks have taken all reasonable steps to collect the money, and I think that the powers that be are very alert to the possibility of fraud going on through bounce back loans, because just of the sheer quantities that were originally issued. So I think my advice is to seek advice and take one of the options. I mean, if you really can't pay the loan, then you have to sort of go through the insolvency part of it. But I think trying to repay it if it's your own personal liability is probably the safer option. So there you have it, bounce back loans. There are, I think, literally millions of bounce back loans taken out, and if you have trouble repaying them, then and particularly if you want to close your company because your company is no longer trading, then the principal options are to continue to pay it but generate the income privately, or get a personal loan to repay it. It is also possible to let the company go bust, but you must realise that once you do that, you lose control of the company, so you don't really know where that's going to end up. So that's bounce back loans. Thank you for watching. If you want to be kept up to date, then please subscribe to the channel. If you press the like button, it really helps me. Thank you.